from Washington, D.C.
From Bloomberg's Washington, D.C. studios to our TV and radio audiences worldwide, welcome to Balance of Power. Alongside Tyler Kendall, I'm Kaylee Lyons.
Tonight, the crypto industry gets a big win as the House sends a stablecoin bill to the president's desk, the first federal legislation to regulate those tokens.
The administration continues to be in support of that. We are definitely receptive to it to make crypto payments easier and more efficient for those who seek to use crypto as simple as buying a cup of coffee.
We're live on Capitol Hill with the latest on digital asset legislation, and we'll discuss with Democratic Congresswoman Debbie Dingell of Michigan.
And U.S. retail sales rebound, easing some anxiety around the impact of tariffs on consumer demand. We'll get a read on that through the lens of domestic imports with Jean Seroka, Executive Director of the Port of Los Angeles. And we'll have more on the economy and President Trump's continued pressure on Fed Chair Jerome Powell to cut interest rates with Joe Lavorgna, counselor to Treasury Secretary Scott Bessent.
Plus, the White House announced that President Trump was diagnosed with a vein disease. We'll bring you all the details on his conditions up ahead. But we begin tonight with Congress, where the House just passed landmark stablecoin legislation. The bill is now ready to be sent to the president's desk. Joining us now with the details live from Capitol Hill is Bloomberg's Erik Wasson. Erik, you've been covering this. What did it take to get the bill over the finish line?
Yeah, there was a lot of drama with Crypto Week. Essentially, it surrounded this issue of whether the central bank can issue a cryptocurrency. Libertarians and members of the House Freedom Caucus were very concerned that this prohibition on doing it would not in any way make it into law. There was a last-minute agreement to eventually attach it to the must-pass defense authorization bill at the end of the year. Essentially, they're worried that a central bank cryptocurrency would be able to track the payments of all the citizens in the U.S. and violate privacy. It's not going to be part of this market structure bill that the House also passes being sent to the Senate, and that gives that bill a greater chance of getting the 60 votes it needs to pass the Senate sometime in September or beyond.
And Erik, when we consider the House's business remaining for this week, we know we're up against a deadline of tomorrow for the rescissions package that just passed the Senate in the wee hours this morning to actually be signed into law by President Trump. When is the House vote likely to happen?
You know, I'm hearing it's going to be around midnight. This is another example of Congress doing its, business much like a college student at the last minute, very much in the middle of the night. Basically, this is a real death knell for federal funding for PBS and NPR. Many rural stations, smaller stations will close because of this, even if larger TV and radio stations can make it up through donors. It also claws back a significant amount of foreign aid. And the White House is promising more of these DOGE-related bills to come up before Congress. This is $9 billion in cuts. Democrats are saying this undermines the bipartisan traditional appropriations process that's needed to keep the government funded after October 1st and raising the possibility there could be a shutdown. They say, if we strike a bipartisan deal where you get your defense money, we get our PBS money, then you go out and take away that PBS money, they can't do any kind of deal. So we're going to be watching that unfolding situation, but there certainly is a rising shutdown risk in the fall.
All right, Bloomberg's Erik Wasson live on Capitol Hill for us. Thank you so much. And we want to get back to the crypto legislation specifically, more on this administration's crypto policy push overall as we turn to Joe Lavorgna, counselor to Treasury Secretary Scott Bessent, former special assistant to President Trump during his first administration. Joe, welcome back to Bloomberg TV and radio. When we consider the legitimizing nature of this stablecoin vote specifically and the fact that President Trump is going to have to sign stablecoin legislation into law, I wonder what the implication is here for that legitimacy for traditional financial institutions. We had a lot of big bank CEOs on earnings calls this week talking about how stablecoins could actually pose a risk to them in terms of competition for payments. Do they have something to fear here?
Let me say at the outset, the bill is going through. It went through because of President Trump's leadership. And as Secretary Bessent has highlighted, this is incredible innovation as the president wants the U.S. to be the crypto capital of the world, the digital asset of the world, and the fact that basically the stablecoin market is growing at a really almost an exponential pace, and the possibility is this could be a several $1 trillion demand for U.S. assets is extraordinarily positive. And, when you have innovation like this and the U.S. is going to be the center of it, I can understand how people get nervous about it because it changes the way of doing business. But this is going to provide a regulatory framework that's going to keep the U.S. at the forefront of innovation, buttress the reserve currency of the dollar. I think it's fantastic legislation, and kudos to President Trump and Secretary Bessent for helping this thing get over the finish line.
Joe, we just had some reporting from the Financial Times hit that President Trump is preparing to open U.S. 401ks, the retirement market, in part to crypto investments. Knowing how famously volatile digital assets have been, cryptocurrencies have been, is there not some risk in that when we're talking about retirement investments specifically?
I mean, if you're setting up a 401k, like for example, take the Trump accounts, for example. I mean, you're holding this asset over long periods of time. I mean, these aren't trading vehicles. Stocks themselves can be incredibly volatile. So, I mean, if it's for retirement, it's for long-term savings and wealth creation, then you want to give people the opportunity to diversify their asset flow in a way that meets their own needs. So I don't see a problem with any of it, actually.
Mr. Lavorgna, we want to pivot and talk about the Federal Reserve. I know that you agree with President Trump that the Fed should cut, but does this pressure campaign that we are seeing from the administration risk that it might not be credible to the markets when the Fed ultimately does cut rates?
Well, the market actually has rate cuts built in. It has had rate cuts built in for some time. Chair Powell and many of his colleagues have said many times, and you see it in their official forecasts, that the Fed funds rate is actually well above what they consider neutral, which means monetary policy is tight. And if you look at the 10-year note, the 10-year yield essentially has been trading below the Fed funds target for a couple to 3 years or thereabout. So the market really is saying that inflation's not a problem. In fact, we can get to it. The inflation data has been great. So the market is expecting easing. So whenever the Fed eventually does ease, that seems to me clearly the next move. I don't see the market being disjointed in any way. And the president, as the president of the United States, has all the all the reason. If he wants to talk about anything he wants to talk about, he should go for it, and he is. So certainly people respect that. If it wants to be on the Fed, then so be it.
Well, the president has suggested that rates are currently 3 points too high. Just for clarity, where do you think the Fed funds rate should be?
All I could say is if you look at the Fed's forecast for where neutral is, there's a very wide range. Neutral is as low as about 2.5%. Maybe rates need to eventually perhaps go lower than that. So I don't think President Trump is off the mark. Just as an aside, if you remember back under President Trump's first term, he says the Fed should cut rates, and he was correct. The economy was doing very well. It grew almost 3% in his first 3 years, and of course the pandemic struck. And the Fed funds rate was sort of where President Trump is saying it should be. So the president certainly has the right to talk about monetary policy. It's very important, and he may not be off base on many of this.
Well, talking about monetary policy is one thing. Openly suggesting that the Fed chair is doing a poor job and therefore may need to be replaced expediently is another, as we're hearing from others in the administration, like Bill Pulte, who, of course, is openly calling for the chair to resign. I just wonder here, Joe, if the ultimate goal is lower interest rates, that you want lower interest burden when it comes to the U.S. debt, lower mortgage rates for everyday Americans, if you don't see a risk here that there's actually an adverse effect, that, yes, we may see rates come down at the short end, but at the long end, because of a loss of credibility around keeping a lid on inflation, you actually see long end rates go up.
Yeah, I've never really believed that, because the Fed said it's data dependent, and the inflation data has been excellent essentially for 5 months in a row. I mean, people got all worried about the CPI, which basically came in line with expectations. Then we had a stellar producer price index and an import price report today. So if the Fed's following the data and inflation's going lower, and they wind up cutting interest rates, I don't see how markets are going to be worried about that. In fact, if you look at where yields are, they're lower than where they started the year. And when a lot of the people who are worried about the market selling off because of credibility and things of that sort, these are many of the same folks who back in April said the U.S. was uninvestable. And yet we had Treasury data that came out today that showed essentially record inflow into the market with Treasury demand virtually at an all-time high. So these arguments, I don't think, hold up to really scrutiny into the facts.
Well, I'm glad that you brought up the data, because the retail sales data today showed that it was weaker among some sectors: furniture retailers, department stores, sporting goods stores. These are the sectors that tend to be more import heavy. I'm wondering, how do you explain consumers perhaps rotating away from those categories that have that high tariff exposure?
Yeah, I would not. Yeah, you have to be very careful with that. People have done the same thing with the CPI data. Every month there's relative price change. There's seasonal adjustments in these numbers. They move around a lot. The vast majority of the retail sales categories went up. I'd be very careful to cherry pick a couple of sectors that have some relation to imports and then say, okay, this is the tariff. Because what we know is the import price data, prices from China year on year are actually lower. Well, obviously we have a big trade deficit with a record trade deficit. Prices year on year are lower for Chinese goods now than they were back when President Trump first instituted those tariffs. So we have to be very careful in looking at the data. It's clear, and it should be obvious to everyone, that the tariff effect has not shown up really at all, despite expectations that tariffs would be causing these massive price effects. They haven't happened, and yet, of course, we know the tariffs are working because we're generating record revenue. We may have $300 billion in Treasury revenue this year from tariffs. That's not the calendar year. That's not an unreasonable estimate.
And Joe, finally, before we let you go, I know you serve as counselor to Treasury Secretary Scott Bessent. I'm sure it's not news to you that Scott Bessent reportedly is on the short list for who could become the next Fed chair, in addition to others in the administration like Kevin Hassett of the National Economic Council. If the president asked you, is that a job you would want? Should we put you on the short list?
Secretary Bessent is tall. I'm short. The only list I'm on is the 5'8" list, 5'8" inches tall on a good day.
All right. We'll leave it at that. Joe Lavorgna, counselor to U.S. Treasury Secretary Scott Bessent, thank you so much for joining Bloomberg. Coming up, the outlook for the Federal Reserve as we continue this conversation, tensions escalating between the president and Chair Jerome Powell. But first, the Port of Los Angeles saw a busy June as tariffs whipsawed imports. We'll discuss with Gene Seroka, executive director of the port, next. This is Balance of Power on Bloomberg TV and radio.
The outlook for earnings is decent, but it is not spectacular. The outlook for economy is decent, but not spectacular.
The only thing that's certain is uncertainty. The only high conviction you should have is low conviction out here. We should expect volatility. That's the highest conviction theme that's out there right now.
Whether or not you have 1 or 2 or 3 or 0 cuts from now to 2025, I'm not sure that that's a game changer for the U.S. economy.
The irony in all this, Jonathan, is that the Fed would probably be lowering rates had it not been for the policies around trade, tariffs.
Just some of the views this morning on Bloomberg Surveillance on everything from tariffs to the Fed. And despite questions around the future of both, stocks closed today at fresh records. For more here on Bloomberg TV and radio, we turn to Bloomberg's Romaine Bostick, live from World Headquarters in New York. And Romaine, up we go once again.
Yeah, sometimes you don't need spectacular, Kaylee. I mean, sometimes you just need okay, and that's kind of what we got. We saw that on the economic data front with that retail sales report this morning, and we saw that with the slew of earnings that seemed to confirm what a lot of folks in markets have kind of sussed out, which is that the tariff impact and the policy impact coming out of Washington, at least for right now, isn't material to the bottom lines. Case in point is Pepsi. PepsiCo reported earnings this morning, and they, of course, talked a lot about tariffs, a lot about economic conditions, and they also made it clear that they have pricing power and they have levers to be able to deal with some of that tariff impact. And you saw the shares rally 7.5%. In fact, best day for Pepsi going all the way back to early 2020, if that gives you a sense of where investors' heads are at. And then, of course, when it comes to the broad cap space, you had Taiwan Semi, the big chip manufacturer, contract manufacturer for chips, basically saying that all of that corporate spending on AI, Kaylee and Tyler, that too is still intact. You saw that stock rally as well as a lot of the chip stocks, and that might be emboldening the markets overall to continue this rally, which as of today has the S&P and the NASDAQ each at record highs.
Well, Romaine, another company we want to highlight is Netflix, which boosted its revenue guidance for the full year. What else did we learn for that company today?
It was actually a really good report, Tyler. Unfortunately, the shares aren't moving a whole lot, and that's largely a function of the fact that this stock had rallied pretty significantly into today's report. Now, remember, it's a relatively small weighting in the S&P 500, only about 1%. So as Netflix goes, not necessarily goes the broader market, but it is a good barometer of investor sentiment, and we'll see what happens when we get to the cash session tomorrow morning. Right now, the conference call is going on, but you're talking about a company that reported record profit, record revenue, and says it can continue to grow for one big reason, Tyler, and that's because we're all still tethered to this network, and more importantly, we're willing to pay up, whether it's that subscription fee, that really high one, as high as $20 a month, or maybe that lower tier one, that ad tier fee, which right now is $8 and rising.
I believe I might be guilty of that too, Romaine. Bloomberg's Romaine Bostick, thank you so much. Now, as markets brace for the full impact of tariffs, imports have whipsawed off the changes in the administration's trade policy. This is being felt in the busiest U.S. trade hub, the Port of Los Angeles, which saw a record month in June as businesses raced to beat shifting tariff deadlines. Joining us now live here in our Washington studio is Seroka, Executive Director of the Port of Los Angeles. Mr. Seroka, thanks so much for joining Bloomberg. I want to drill down on some of this data. We saw an 8% surge in year-over-year imports in June for your port. You had seen a slump in shipping volumes in May. What are we learning about importers' behaviors as this tariff deadline shifts, but now appears to be set on August 1st?
Good afternoon, Tyler. It's so great to be here with you both. What we're seeing is that hard policy goes in, we take a nosedive on cargo volume. When those goalposts shift, the cargo picks up, trying to race to the next deadline.
Well, so when we're considering timelines here, knowing this next deadline is August 1st, even if the tariffs were implemented, are they likely to be that disruptive of an effect when we consider seasonality and the fact that a lot of retailers, for example, likely have already stocked up for the holidays? Are we getting to the point in the year where it's not as potentially detrimental as it could have been?
Possibly not, but there are two sides to that coin, Kaylee, as well. There's a little bit of an advance so far this summer in bringing in the traditional year-end holiday products. But the folks that work in and around this system, dock workers, truck drivers, warehouse folks, they're going to see a dip in that cargo probably in August when they normally start really hitting their stride as far as work hours and jobs. So that could look a little bit different than in years past.
I'm actually glad that you brought up the labor force because the last jobs report indicated that some of these areas really have remained relatively stable when we are talking about dock workers and truck drivers that are working in and around these ports. Can you just give us a sense on the ground, what you're hearing about what their growth prospects actually do look like amid this uncertainty?
Yeah, this has been really up and down, Tyler. In the back half of May, for every 2 dock workers that went to the hiring hall looking for a job, 1 went home without one. And that was really unique for us. Then in the back half of June, we started to see that cargo rise again after the tariff numbers, especially with China, were dropped. We saw people scooping up that cargo over in Asia, trying to rush it in. The dock workers' jobs now outstrip the number of workers we have going to the hiring hall. So it's been a pretty quick swing. Yet those longshoremen have been on the job. They've been ready to bounce back when that volume shift actually happens. But we like to see a little bit of runway here so we can plan the good labor force, the space that's needed at the ports, and the equipment to move all this cargo. A little predictability always helps us.
Well, when we consider China specifically, which you just mentioned, China, of course, right now has tariffs lower than they were thanks to a tentative agreement that the two countries have made at this point. But the president's also suggesting that they could face a 100% tariff, a secondary tariff, if they continue to buy Russian oil at the end of 50 days. How much does what happens at the port of L.A. hinge specifically on our policy when it comes to trade with China and those trade flows continue?
Kaylee, a lot. Back when, in 2018, when the first tariffs went in, China was 60% of our business at the Port of L.A. Today it's 45% and dropping. The effective tariff with China right now is still 55%. We're definitely seeing cargo shift to other locations with lower numbers. But let me put it this way, too. Everybody in other countries, manufacturers and sourcers alike, they understand that 55% tariffs on China means a landed price of X. They're not going to be appreciably lower than that. So it raises prices at the wholesale level across the board when it comes to the international procurement side of our business.
If we broaden this out and we're talking about perhaps a shift in, or maybe you can answer this, is there a shift in demand for U.S. exports abroad when we see Canada, for example? We know that there's been a really strong national response to boycotting U.S. goods. How are you seeing that come through in your data?
Yeah, we're down on the export side of the business, Tyler, 6 of the last 7 months, mainly on the heels of reciprocal tariffs overall, and even with the weakening of the U.S. dollar. Although subtle, really haven't seen that uptick. What we have noticed, though, is that China and other Asian nations have been making deals with different trading partners. Soybeans coming out of Brazil, almonds from Australia. And those commodities contracts are usually 6 to 12 months in duration. It, too, is not a transactional business.
Well, it's interesting to hear you say that, Gene, because the president, of course, says one of the objectives of his trade policy is to make more in America, manufactured in America, for then export elsewhere. He wants other companies to be buying more U.S. goods, and you're saying it actually could have the exact opposite effect.
It could right now. And again, we've only got maybe 2 or 3 framework trade deals done at this point in time. We're gearing up for more exports. As you remember from conversations before, we have 4 imports coming into the Port of Los Angeles to only 1 export going out. I'm here in Washington in part to try to rally support around raising the Vincent Thomas Bridge so we can handle the largest ships in the world geared toward that export market. So we're preparing years down line as these frameworks come to play and the trading nations start looking at what more they can buy from the United States.
You mentioned the so-called reciprocal tariffs. We know that another set of nations were tariffed under IEEPA on concerns of fentanyl. Canada, Mexico, part of the China tariffs too. Has there been any enforcement, or have you seen anything ramped up around your port when it does come to concerns over fentanyl coming into the country from the administration?
Heightened alert across the board, whether it be U.S. CBP or other federal agencies working with local allied folks on the ground. And that is absolutely sacrosanct to control the influx of those illicit drugs.
Well, when we think finally in our final minute here, Gene, about the overall picture in demand, the president is talking about an economy that is very strong, that could use some lower interest rates, but by and large, the administration is trying to paint things as being in good shape. Is that the view of the economy you see overall from your perch at the port?
Q1 GDP declined. Beige Book in the midpoint of Q2 was a little bit showing business contraction. We're eagerly waiting to see the Q2 results. Today's retail numbers were really encouraging, but it's been choppy as far as us being able to see that 3 months out of the order cycle process. Folks have brought in goods a little bit early, but not as much as you would think for those year-end holidays. So it'll be interesting to see what selections look like on store shelves and online buying apps for the year-end.
And we just have 30 seconds left, but this is actually something I've been wondering about, as we've seen President Trump suggesting that transshipping for certain countries is going to be tariffed on a higher rate. Is there a way for the port to track what is actually coming, maybe from a vessel carrying a different flag, but it's actually originated in China? Can you get detail on that? How is that tracked?
I worked in Asia for over a decade. I don't have much evidence of that. There are piece goods that go into finished goods that move out. That's a very different look than normal supply chains would appear.
All right, Gene, it's always great to have you. Thank you so much for joining us here in our Washington, D.C. studio. Gene Seroka, Executive Director of the Port of Los Angeles. And we still have much more coming up here on Balance of Power. We're going to go live to Capitol Hill next as the House passes 2 pieces of crypto legislation. A stablecoin bill that will now head to the president's desk, and a market structure bill that now heads to the U.S. Senate, where it has a fairly uncertain future. There's, of course, a rescissions vote looming as well at some point in the next 24 hours, we assume. We'll have more with Democratic Congresswoman Debbie Dingell of Michigan next on Balance of Power on Bloomberg TV and radio.
It was very interesting and instructive to look at what happened during the hour on Wednesday, when there was an expectation that the president planned to send a letter firing Chair Powell before that was corrected. My best guess is that this step ultimately will not be taken because I think that the market consequences would be fairly immediate and quite severe.
That was former Treasury Secretary and Wall Street Week contributor Larry Summers. He was speaking in an interview on Bloomberg about the latest criticism against Fed Chair Jerome Powell. And joining us now with the latest is Bloomberg's Michael McKee. Mike, Chair Powell actually just responded moments ago to the OMB Director Russ Vought's request for information about the Fed's recent renovations. What are we learning about the Fed Chair's latest response?
Well, the people who cover the Fed aren't learning a whole lot because this is basically what the Fed has been saying all along, but maybe Director Vaught will learn a little something. Some people think that this has been a pretext to try to find cause for the president to fire Jay Powell. Powell says that they're misunderstood, that Fed has been regularly monitoring the costs. They've gone up by circumstances outside of their control, plus the fact that they're renovating two buildings from the 1930s that have never been renovated. They have to do things like asbestos removal and shore up the building on the inside so they don't collapse. One of the interesting notes that Jay Powell put into his letter is the criticism that Director Vogt put forth over what's called garden terraces. He says what the garden terrace is actually the lawn in front of the Fed building, which is the roof of the parking garage. So they have to put something on top of it. And so they put grass on top of it. So it's a very thorough attempt at debunking the criticisms that the Fed has spent a lot of money on palaces. A lot of lawyers think that it's not going to be enough for a fraud charge anyway, as the president was suggesting. But it is the Fed's latest effort to defuse tensions between the White House, the administration, and the Federal Reserve.
Well, criticism of their renovation project is one thing, Mike. Criticism of the current stance of monetary policy and where the Fed funds rate is right now is another. You, of course, spoke about that with Mary Daly, the president of the San Francisco Fed, earlier today, asked her opinion on when exactly rate cuts should materialize this year. This is what she said.
You can't wait forever, because if we wait till inflation gets to 2%, well, then we've lost. We've likely injured the economy in some way that was completely unnecessary. And so I'm of the mind that, you know, the summary of economic projections we put out, which had 2 rate cuts for this year, I think that's a reasonable outlook to have.
What else did she tell you with her thinking around this, Mike?
Well, she's basically saying much of the argument that Chris Waller has made in his effort to suggest a July rate cut, and that is that if you wait too long, the labor market can deteriorate, and we have seen deterioration in the labor market in that we are not seeing strong hiring anymore. However, the unemployment rate hasn't gone up a lot, and jobless claims haven't gone up a lot. So Mary Daly isn't signing on to the July rate cut, at least not at this moment. She also pointed out that we have seen some tariff pass-through in the inflation numbers, even if the overall inflation numbers are still in sort of the range that they have been in. So she's definitely suggesting 2 rate cuts this year, but not saying when. But she wouldn't commit to what she was going to do in July, although it's likely she would support the idea of waiting at least till September.
All right. Bloomberg's Michael McKee, live in Idaho. Thank you so much. Now, the White House press secretary, Caroline Leavitt, had to field a few questions about Fed Chair Jerome Powell during a press briefing today, saying that President Trump just spoke about how he feels regarding Powell. But Leavitt also discussed details of President Trump's rescissions package that passed the Senate last night.
Look, $9 billion worth of crap that it was in our federal funding that is now being rescinded. This is a good thing for the American people and the American taxpayer. And I think our Office of Management and Budget Director was saying this process should be more bipartisan. Democrats, there was a time in this country where Democrats, too, cared about getting rid of waste, fraud, and abuse in our federal spending. I think every American agrees the government spends way too much money on things that don't matter.
The rescissions package is now awaiting a vote in the House that could happen in the wee hours in the morning. Joining us now with more live from Capitol Hill is Democratic Congresswoman Debbie Dingell of Michigan. Congresswoman, thank you for being here on Bloomberg TV and radio. As we heard this suggestion of bipartisan compromise, assuming this rescissions deal package does indeed pass the House at some point in the next 24 hours, what does that do to the odds of a bipartisan compromise on appropriations at the end of the fiscal year?
It's going to do very serious harm. And first of all, when she makes the accusation that Democrat used to be that we would work together in a bipartisan manner, Doge didn't talk to Democrats. It didn't care about what they were doing. They went into these departments, were reckless in the cuts that they've done. They have hurt our national security. They have hurt our economic security. They're cutting programs like public broadcasting, Sesame Street. What are they doing to health and human services? I could go through a list of things. And they have jammed this down our throat. There are people that are going to be hurt. They are taking dollars that were appropriated in a bipartisan way and saying, nope, we're not going to spend them. So if this is what the president's going to do, how serious do we take an appropriation process, work on it in a bipartisan way, and think he's going to do this again? It's not okay. We should be working together. We should be eliminating waste and abuse, but not eliminating programs that are really critical to saving lives, both here and abroad. So, no, I'm not happy with the way all of this is being handled.
So, Congresswoman, what is the tactic here then from Democrats when you do have the Russ Vought, the OMB director today, saying that perhaps funding should be less bipartisan, it should be more partisan? What can Democrats actually do here to advance their legislative agenda forward if at the moment Democrats don't control either chamber of Congress or the White House?
So let's be really clear. We have a system of checks and balances. When we use rescission, which we're doing in this process, which I think we need to hold them in check on because I really don't think it is parliamentary correct. But I mean, we get into the weeds here, but a long time ago, it was decided that budget issues would not be subject to a filibuster. So when you do the appropriation process is they need 60 votes to be able to move anything. I want to work in a bipartisan way. And I want to tell all these people out there that are talking to me, that are worried about what's going to happen, their fears. Elections have consequences. So right now, I'm working with my Republicans on things where it's going to help people. Our appropriators are meeting, as you and I are talking right here, and try to reach bipartisan deals. Susan Collins, the chair of the Senate Appropriations Committee, a Republican from Maine, is expressing her frustration at what's happening, and by the way, voted against the rescission package in the Senate. So you don't give up. You don't say you're not going to keep trying. I'm going to, but you got to know what you're up against and work for the moment and know, as I say to everybody watching, elections have consequences.
Well, as we think about the idea of bipartisanship, we actually did see it on display in your chamber earlier today, as on a bipartisan basis, both the Genius Act and Clarity Act, two pieces of crypto legislation, passed. The Clarity Act got 78 Democratic votes, the Genius Act even more than that, but you were not among those votes, Congresswoman.
No.
Why?
Well, I was not among them because I think President Trump spoke and people jumped. I think that it's reckless legislation. I want to just point out, I feel like I'm playing with Monopoly right now. There are loopholes in this legislation that endangers our national security. But President Trump has made $1.2 billion since he's become president on coinage that's being, he's trading with foreign governments on top of it all. There are ethics issues here. I'll sit down and have legitimate discussions about where we go on crypto, but the bills that were there today are just reckless, endanger people, endanger investors. There are a ton of loopholes, and I'm just not going to play Monopoly with our nation's economy.
So, Congresswoman, do you think that the Democrats that did vote for this, did they make a mistake? Because we are up against an August recess, and there did seem to be an urgency to try to get some sort of legislation when it comes to regulation of the industry passed.
Look, each of my colleagues had to make their own decision. So, Angie Craig, who's the ranking on the Agricultural Committee, said it's not perfect. We should vote for something. We each have to make our own decision. I looked at these bills. I look at the loopholes. I see how risky they are. I'm unwilling to take that vote. And I'm unwilling to continue to let people make money off of it with foreign governments that are really threatening our economic and national security. So my colleagues, I respect them. We have a difference of opinion. You know, people inside a party can take different approaches to issues, too.
Well, sure, as everyone has a different constituency that they're answering to. And Congresswoman, I would like to talk about your constituency in Michigan, obviously, as we consider a heavy presence of the auto industry. The president contends that part of his tariff policies, the tariffs sectorally on autos, for example, but more broadly, are designed to protect people like auto workers, to benefit from them. Are you benefit them in that way? Are you hearing from them that they are feeling that benefit, that this is actually policy that is working on the ground?
So I am somebody who's made it very clear. Tariffs are a tool in the toolbox. I think President Trump won on trade in 2016. NAFTA was the worst trade policy we had ever had. I think the way that he has been implementing them has been chaos. It's harmed a lot of our strategic relationships. It has increased prices. A watch company that had been in Michigan for 99 years, or clock company, closed over the weekend. You're seeing negative consequences, but we do need a level playing field for autos. And but Canada's not our enemy either. So I do think they're a tool in the toolbox. I want to work with USTR on this. We need to get it right. But the way that the chaos the way that this is all being done is causing harm to some industries, and it's raising consumer prices, and you're starting to see that. We lost a big chip plant in Michigan this week because of the chaos and the uncertainty. The company came right out and said, we're not going to build this chip plant here because the chaos is there's too much uncertainty. We just can't build it.
Just in our final minute left, Congresswoman, I want to build on this because we are seeing sector-specific tariffs, particularly when it comes to autos, come into the negotiations on trade talks for the so-called reciprocal tariff plans. I know you mentioned Canada. We're seeing a lot of USMCA compliance. But when we're talking about negotiating with the EU, for example, would you caution the Trump administration not to give away too much when it comes to the auto tariffs in those discussions?
I want to sit down and really have you can't summarize this kind of discussion in a minute. I think we all learned that NAFTA was a terrible trade policy, and it did ship jobs overseas. USMCA we still need to improve it. China should not be able to build plants in Mexico and call itself a North America product. Europe has been a trading partner with us. They've been an important ally. We got to sit down and have nitty-gritty conversations, and I hope that we are going to do that auto-specific.
All right, Democratic Congresswoman Debbie Dingell of Michigan, thank you so much for joining Bloomberg. And coming up, the White House announces a health update for President Trump during the White House's press briefing earlier today. We'll bring you those details next when we assemble our political panel on Balance of Power on Bloomberg TV and radio. This is Balance Power on Bloomberg TV and radio alongside Kaylee Lines. I'm Tyler Kendall. Here's a look at some of the other stories we're watching in today's Bloomberg Power Brief. Jeanine Pirro is one step closer towards becoming confirmed as Washington's top federal prosecutor. With no Democrats present, the Senate Judiciary Committee voted to advance her nomination to be U.S. Attorney for the District of Columbia, where the former Fox News Channel host would oversee the nation's largest federal prosecutor's office. She previously was the district attorney in New York's Westchester County from 1993 to 2006 and served as county court judge in New York in the early 90s.
Texas Attorney General Ken Paxton is threatening to arrest state Democratic lawmakers who obstruct Republican efforts to draw new congressional maps, raising the stakes for a controversial effort backed by President Donald Trump to protect the party's slim majority in the U.S. House of Representatives. If enough Democrats flee, the state legislature would be short of the minimum number of lawmakers required for a vote, a strategy Democrats have unsuccessfully tried in the past. The special legislative session is set to begin on Monday. And in response to the redistricting effort, California's Democratic Governor Gavin Newsom says he will back a redistricting effort in his state to counter any gerrymandering in Texas.
And President Donald Trump has been diagnosed with chronic venous insufficiency. White House physicians say he is in, quote, excellent health and that it's a common condition for those over the age of 70. The White House medical unit conducted a comprehensive examination of the 79-year-old president after recent photos showed him with swollen ankles and a bruise on his hand. It occurs when damaged valves inside the vein struggle to keep blood flowing from the legs back to the heart. The White House says the hand bruising is due to, quote, soft tissue irritation from frequent handshaking.
And joining us now with their reaction to this story and others is this evening's political panel. Matt Gorman, Executive Vice President at Targeted Victory and Republican strategist, alongside Democratic strategist Kristen Hahn, partner at Rock Solutions. Welcome to you both. Obviously, the White House, Matt, has made a big deal about being transparent, and we're seeing that on the medical front today as well. I wonder what you think that is in response to, as we know there had been images online circling of the president and his hands.
Clearly they're trying to get out in front of this. They also didn't notably release this on a Friday afternoon, trying to dump it there. They're being pretty transparent about it and pretty open about it. I mean, look, this doesn't seem to be anything terribly serious. It's just, one of the inconveniences of age. So I don't think that there's much more to it than that. But certainly a subtle contrast also with the Biden administration.
Well, Kristen, I actually want to pivot gears a little bit here. Beyond that story, one of the big ones that we're tracking today is the rescissions package. And we actually heard from Democratic leader Chuck Schumer, who's saying that the OMB director, Russ Vought, should be dismissed for saying that perhaps the appropriations process shouldn't be done in a bipartisan way. Is that something, in your opinion, that would rise to that level, or is this just how politics goes these days?
I mean, I think that he said the quiet part out loud. I'm not sure about dismissing somebody for saying that, Russ is not a bipartisan person. I've known him for years. I don't think it rises to the level of dismissal. I do think it's unfortunate. If you've worked in Congress, you know that the Appropriations Committee is maybe the last bastion, that and maybe the Ag Committee, where people actually work together and come together to figure out spending priorities. So, to just dismiss bipartisanship altogether in the place that it's kind of the last place it is unfortunate.
Well, couldn't we suggest that actually what you might be seeing with this rescissions effort on Capitol Hill is doing appropriations in a non-bipartisan way? Because, yes, you may make a deal and get Democrats to vote for a appropriations package on those grounds, but then you can just rescind the parts that Democrats put in there that you don't like later. That's the argument that they're making.
I think it was notable that the rescissions package passed with more than just a tie, so J.D. Vance didn't have to come in. As I understand the strategy is to keep doing these rescissions packages until they can't pass them anymore, almost like the CRAs we often saw. So I would say with the tight margin we had, Collins and Murkowski against, I would expect one or two more packages of rescissions to come up at some point this year. And then again, once the appropriations process will take its course, Democrats want to fund the government. I think they realize it's in their interest too. But the rescissions package, that's what I would expect, one or two more.
Well, the other legislation that, of course, we were tracking today was the crypto legislation. And when it comes to the Clarity Act, the market structure bill, it ended up passing the House. 78 Democrats voted for it. Does this give the Senate perhaps a mandate to get on board with this, too, when you have what appears to be bipartisan support for the bill?
If there's ever a mandate to the Senate, the Senate's its own beast. But, I think certainly if you look at what's happening right now, and a lot of things are just purely falling down on partisan lines in the House and the Senate. If you have a bill where you have so many Democrats, voting for it, which ostensibly means that you're working behind the scenes together. I always say that there are still some things people are doing together behind the scenes that we're not necessarily talking about every day. I don't know if it's a mandate, but it's certainly something that the Senate will look at.
Yeah, well, obviously, certain issues make strange bedfellows, and we might be seeing that as well in the case of Jeffrey Epstein, or rather the case of trying to release more information about Jeffrey Epstein and the case against him, as Democrats are now calling for the release of more information, just as far-right Republicans are as well. Some of the members of the president's very base who are actually calling for a special counsel to be appointed in this case. That's something that the White House press secretary, Caroline Leavitt, was asked about during the briefing earlier today. This is how she responded.
The president said that he floated the idea of a special prosecutor in the Epstein case. Can you confirm that? And has he asked the Attorney General to do this, to appoint a special prosecutor to look it over?
Well, the idea was floated from someone in the media to the president. The president would not recommend a special prosecutor in the Epstein case. That's how he feels. And as for his discussions with the Attorney General, I'm not sure.
I just wonder how some of his supporters might feel about that, Matt, or as he referenced in a True Social post overnight, some of his past supporters who he says are buying into this hook, line, and sinker.
Remember, many folks at the DOJ and the Trump administration believe that a special prosecutor is illegal on its face. So I would not be surprised to see that jettisoned regardless. That's also politically a way to keep the story going in a way they don't want to, right? I think Republicans fighting with themselves is catnip for the media. So the more they do it, the more people are going to cover it. So I think in a lot of respects, this has been one big Streisand effect. You're calling attention to something you don't want to call attention to by protesting too much. And so I think the more that this kind of plays out, with Democrats certainly help, it's going to cause more and more media coverage, and it's going to be self-perpetuating.
Well, I was going to follow up on that and ask, when will this go away? Is there any chance that it goes away when we now have a bipartisan move in Congress that could potentially force a public vote for members to vote on having the government release the files of the case?
It'll go away when there's not enough new news to talk about it, right? I think that is the key, right? After this vote, we will see if they end up discharging this. If, depending on how the timing works out, this could be after August recess. So one thing I think Trump recognizes is the media attention, he's willing to outlast it. He's tried shifting some priorities, even the Powell float. That will not work, so he almost has to run up the clock a little bit.
So suggesting, Matt, is that the Powell float was potentially something to try to divert the media cycle away from Jeffrey Epstein. Kristen, do you see it that way?
I think this is maybe, as a Democrat, and the midterms are a little far away, but I always try to keep our eye on the ball. It's about the economy. It's about, I don't want to get distracted by other things. However, I think, with a lot of Trump supporters focused in on this issue, I'm not sure that they're going to be deterred by a simple, diversion here or there. I mean, time will tell, but I think it'll be really interesting to see. But I don't think that it'll divert their attention on something that they were really focused on for a while.
Well, Matt, since you did bring up the Fed chair,
Yeah.
we have to ask you
Let's
about
do it.
this. But we have spoken to quite a few Republican lawmakers on the Hill who say that President Trump does have the right to criticize Jerome Powell. But what is the needle that these Republicans have to thread behind backing President Trump's criticism, but also these legitimate questions about the central bank's independence and credibility going forward?
Well, anybody can criticize anybody else. It's a free country. But I think, look, in an administration as economically, ideologically diverse as Kevin Hassett and Peter Navarro, they are all united, as I understand it, against really being extremely annoyed, to put it lightly, with Jerome Powell. And I think what they're hoping for is, in order to restructure a lot of the Biden debt that is coming due it later this year, you're seeing obviously tariff revenue is a very important part of that, but they need rates lower. They need them around 4% by January, looking at 2 rate cuts. So if that doesn't happen, I think you're going to see an extreme level of frustration with that cabinet that's economic cabinet that's quite diverse.
Kristen, we just have like 30 seconds left here, but when you consider the president's criticism of the Fed chairman, what do you think it's actually a reflection of? Is it about the interest burden of the United States, or is it about that he wants people to feel better about his economy than they currently do?
I think it's the latter. I mean, I think that he needs, he wants the Fed chairman to react to his economic policies, and it's not exactly how that works all the time. So, Fed chairmen over the course of history have been criticized by presidents on both sides, and there you have it.
All right, our political panel tonight, Matt Gorman and Kristen Hahn, we thank you both so much. And for more of the stories that we've been discussing, check out the Washington Edition newsletter on the terminal and online.
And of course, we'll see you back here tomorrow for the Friday edition of Balance of Power. We're almost through the week, everyone. I'm Kaylee Lyons alongside Tyler Kendall. We'll see you then on Bloomberg TV and radio.